So let me get started here. Thank you very much for attending this morning. Happy Monday morning. We've got some exciting content and updates coming from the long-term care insurance industry. Where is this boat going? With Brent DeGroot and State Life. Couldn't think of a better group when we talk about long-term care to go through that. But before we get into it, we've got a diverse audience here, and I want to make sure that we cover two things. One, for the existing producers that we appreciate your patronage that are writing business with us. I want to go through a couple items here that you may not be aware of that can benefit you and your practice coming into this new year. And then two, we'd also like to I'd like to appreciate thank you and Philly, those that may be on the call that are just looking at IMES, individuals that may have just joined IMES and you're in your first couple weeks or so with us for months. I want to share with you some opportunities that you may or may not be aware of and how to take advantage of them too. Just like in your practice, when it comes to a new client, working with a new client, those beginning first couple weeks, days, hours, in our case 180 days specifically, are very important. If you're like us, and I'm sure you are, your goal is not to make a sale and never make a sale again. If you're a referral-based business and you've been receiving introductions and doing it as long as others have, you realize the value of referrals, and you also realize the value and the importance of that trying time in the beginning of a relationship where we're all trying to figure things out. So one of the things that we do is we recognize the importance of that first 180 days as a producer with IMES. And we know that really to get an understanding of all the things that IMES has to do or can do for you, you've got to submit your first case and walk it all the way through the process. There you're going to meet every person along the way that's going to be helping you in your business joining this new organization. So right out of the gate, let me get on here, our new slide. During that first 180 days, what we're going to do is, again, show you who we are, help you with your practice. At the same time, we're going to give you a reward for writing business in the first 180 days because we know that that's important. We want to incentivize it, and we're going to help you get in front of more people to see. We have different levels broken down in what we call our new Producer Builders program. So if you're new with us in the first 180 days with us, there are several levels. You can take a look on the screen here at 100,000 annuity premium submitted and paid, or 10,000 in target premium. You can see here everything from an iPad all the way up to pre-formatted marketing and emails, 1,500 piece mailing, postcard mailing. Sky's the limit. So if you haven't signed up for this already or have interest in it, reach out to your primary contact at IMES, annuity or life insurance today, and we'll get you taken care of. Coming on board with us, you may also be part of this group. You may be a referred producer, much like your practice on the retail side. We know that our best client relationships are from referees, people just like you that we want to work with. So if you know somebody that would benefit from the same items that we've been doing with you here, let us know, and let your primary contact at IMES know as well so we can get you set up for the referred producer program. We're going to pay you in a couple different ways. First of all, we're going to handle the paperwork and licensing process and onboard that referral, very much like you were brought into us in the beginning. To honor our commitment and appreciation for the referral, we're going to pay you $50 for the one time when they license with us. And then sky's the limit after that. We're going to continue to pay you basis points on their production, whether it be single premium life insurance target premium, indexed annuity premium, fixed multi-year guaranteed annuity premium. We're going to pay you not out of their pocket, the producer that you referred, but out of our pocket. And that's going to continue to go forward once we get you set up. So if you have interest, please reach out to us. Let us know. That new referred producer would also be eligible for the Producer Builders program when they come on. So again, we appreciate it, and let us know if you have any questions. And if you have someone you would like to refer, talk to your primary contact today, or invite them to a webinar. We do these every Monday. One of the reasons people tell us that they come on board with IMES, but more importantly, why they stay with IMES, is our best-in-class service. Not only do we have a 2-ring phone guarantee, meaning we will pick up, our goal is to pick up the call when you call within 2 rings, live person, and we get you what you need or to the right person that you need to talk to. But in addition to that, we handle everything from that original design stage when you're working with myself or Tony or Beth on the life insurance team here at IMES, or the annuity team, all the way through commission payout. So when it comes to designing the case, we'll handle you there. When it comes to helping you with the forms, getting you on our website, maybe to do e-submission, but then also follow up on the 1035 exchanges, follow up on the missing requirements or outstanding requirements for next steps with life insurance, scheduling your paramed for you so that you don't have to set up your paramed if a medical paramed is going to be required. These are all things that we will do for you. Let me know if you have any questions as it relates to this, but we do look forward to working with you and going into the future here. In addition to that, to help, we also would like you to get paid faster, not just because we get paid after you, but that is important too. We want to make sure that there are less errors and issues with your paperwork. We've partnered with two industry gorillas, if you will, Firelight for our annuity, majority of our annuity applications, which is a digital application system that you can register for free on our website. If you haven't done that yet, you'll definitely want to go ahead and do that. Or IGO. If you're doing life insurance with us, you can literally design a case, take an illustration and the application over the internet. And each of these 99.5% accuracy on eliminating not in good order or NIGOs, if you will, in our industry on your paperwork. What does that mean? Getting paid faster. If you have a cash with application case and you're using Firelight, it's very possible to be paid within 24 hours. It has happened before, 48 hours, 24 for issue. But it's going to reduce your error. It's going to be less frustrating, but it also creates a digital, secure platform for all your outstanding applications that you can go back into later, utilize that same data if you had another client, etc. So if you have a question or if you'd like to register for these platforms or haven't used them yet, reach out to your primary contact today. In addition to coming on board for our service, another reason people come on board with IAMS is our customized marketing from our creative team. One of the things I'd say about the creative team here is by far our creative team stands leadership within the social media and digital media world. They understand all the things that I do not, like HTML, how you can leverage videos to get more individuals. How do you beef up your LinkedIn profile on social media? How do you even start with social media? What does social media mean? These are all the type of things that we can do. Many of you have reached out to enhance your brand possibly in the beginning of the year as you're trying to also allocate and budget new ways to get in front of clients. We can help with both. And we also do not retain ownership. So anything we do customize for our writing producers, unlike an advertising agency locally, we do not have ownership over that. So if your content, we create a design for you that is yours to keep. Unlike a local advertising team where you will sign a contract in many cases to where they own that material. And oftentimes you're paying them to educate them on the financial services industry, which is interesting because they will go ahead and use that information to go ahead and get new clients in our segment of the world, which wouldn't necessarily be a bad thing altogether, but why pay them? Our team is in the industry. They are on IAMS paper. They're employees here at IAMS. They work for you. We appreciate your business. We want to be able to help make sure people in your community know you're as sought after as we believe you are, and you are. So give us a call if you want to stick out in the new year. On our website, you can access, I'll go ahead and speed this up because I'm about 10 minutes behind with that in the beginning, but everything from material that you can use right now today on your website, sales ideas, term insurance quotes, registering for Firelight, etc. is on our website. You can download forms 24 hours a day. If you're missing a beneficiary form, boom, you got it right there. Annuity information, rates. Check out our website today. If you'd like to register for our site, don't know how, give us a call. Happy to help. When it comes to helping a client better understand the solutions that you're offering through various insurance companies working with IAMS, we do offer partnership. We have partnership programs, and we offer access to programs like Retirement Analyzer, the software program that literally will help a client extract that plan that they've always had in their head about what they're going to do when they retire. Keep the car, kick the kids out, bring the kids back in, buy the final car, buy the RV, and what assets they're going to use. We're essentially going to take that report. This report will actually take that plan they have in their head and literally lay it out in a simple to understand, graphically depicted picture to show them whether or not the plan that they believe to be true is going to work out the way that they would like it to. And many of those individual clients, just like all of us would prefer, if there's going to be an issue with it, it's better to find out now than the point of running into that issue deep into retirement. So this program can help. It's called Retirement Analyzer. Ask us about it today. On the same note, we've had some significant tax changes this year as it relates to life insurance. One of the IRS's second approved ways of tax beneficial income in retirement is life insurance. We've had some changes there. We do offer solutions as it relates to graphically depicting how a client can better use index universal life for tax-free income. Let us know about that too. It's called Stonewood. If you're considering to get your 66, or you already are an investment advisory rep or an RIA that would like to step away, say, from the compliance complexities and work with a powerful insurance, understandable IMO or wealth manager, let us know. IAMS Wealth Management is looking for new candidates. This is going to become more and more popular throughout the year from what I've been reading, to be more on a fiduciary standpoint. We understand insurance. We understand that there's a place for it within a client's wallet share, and we understand your practice. So if you're considering doing that, come on board. We can talk about things like minimized production requirements, payouts that are better, insurance-friendly, investment advice, etc. So give us a call today. I can get you on the phone with Duncan from our IAMS Wealth Management and take you from getting the books that you need to study for your exam, or taking you from your U10 if you've already taken your exam, and getting you set up. We still have some remaining time here in our trip qualification coming up through June 30th of 2022. So if you got some cases that you're working on and have interest in this, talk to your marketer today. We'd love to see you out there and go from there. Life and Annuity Training Academies. We're still waiting on bringing some of these back as it relates to carriers and companies that are kind of bringing employees back in the office. But in the interim, might as well talk about this. We've got an opportunity to rub elbows with and hear from top producers coming up here at the end of January with Ascend, our national virtual sales conference in its second year going virtual, is going to be hosted here coming up at the end of this month. If you haven't registered for Ascend yet, it's free to register. If you'd like to attend many of the sessions that we'll be going through, or if you'd like the recorded content, please make sure to talk to your primary individual here. We're going to be, just to give you a highlight, a real sneak peek, some of the professional speakers this year within our industry. One of them is a Nobel Prize winner, if anybody's ever heard of Robert Shiller. We also have had a lot of interest in Jonathan Golub, Chief U.S. Equity Strategist over at Credit Suisse. He's going to be speaking about what's coming up next. That should be an interesting presentation, a great one. And then Cheryl Moore, President and CEO of a market research company that focuses on providing intelligence for indexed annuities and life insurance trends in our industry. She's going to be speaking as well. Guest speakers, content, hearing from top producers, sharing very valuable information about what you may want to hear, what you may be working on, and again, the ability to share ideas and leverage the information you get from IAMS. Give us a call if you'd like to register. So with that being said, Brent, are you on with me here?
Whoops, take myself off mute. I sure am.
There you go. Well, hey, couldn't beat my 11-minute intro that no one heard, because I was on apparently we didn't hit the start button, or I didn't. So, but Brent is better than me at doing that first and for sure. Brent, really appreciate you attending this event here. I think we should keep this as a standing topic with us. I always appreciate it. But long-term care insurance, again, has been coming up on the news. We talked the other day, I don't know if we're prepared for any updates on any of this type of stuff, but OneAmerica State Life is definitely staying in the curve. And with long-term care becoming more on our clients' and prospects' minds, we have to have solutions. And couldn't think of a better person to talk to us about that than the portfolio of unique products over at OneAmerica. So Brent, I'm going to switch it over to you and let you go here.
All right, perfect. Thank you, Justin. Appreciate that.
Well, you're welcome.
All right, let me do this. Get this up here and switch the view. All right, let's just make sure that everybody's seeing this. Okay, so as Justin quickly said, long-term care is a very hot button issue. It has been for a number of years now, and here at OneAmerica, we have really a little different way of doing it. Now, these aren't terribly new. I mean, we've been doing this for 30 plus years now, 34 years in the asset-based long-term care space. That's what AB LTC stands for. So our care solutions portfolio is all asset-based, and want to go through just a quick presentation to kind of explain some of the differences and what we have to offer, and just kind of whet your appetite, and then work with everybody at IAMS, your marketing rep there at IAMS. They will certainly point you in the right direction to get more information if we need, but I just really wanted to kind of give you a high-level overview. So first and foremost, many of you may have seen or even represented to your clientele a traditional health-based long-term care policy. I worked, my 20-year career here in long-term care, I have spent the majority of that with a traditional carrier, or traditional carriers, I should say, and have been now at OneAmerica in the asset-based space for, it's about 2.5 years now. And, one of the biggest knocks that we always had or objections that clients would raise was that it was a use it or lose it scenario. Now, that is what insurance really is, just insuring against the catastrophic, insuring something that you don't necessarily want to be paying for in the long run. The bigger bills take a smaller premium payment. So that's what traditional health-based LTC was designed for. I will never bash that. There's always a place and fit for certain clients with a traditional plan. However, I think you guys are uniquely poised to understand exactly what the client's portfolio looks like. And really what is born out of that, like I said, we've been doing this for 34 years now, was an asset-based solution. And why do we say that? Well, if we can just reposition a portion of an asset or reposition a portion of their portfolio, reinvigorate it, maybe a dead asset, even, harvest some gains from the portfolio in this market melt up, there's a good way of putting a long-term care plan in place that protects then the whole portfolio. However, with the asset-based type of solution, whether you live, quit, or die, you're always going to get something from these policies. And that was a big differentiator between the traditional and the asset-based space. Now, there's two different types here at OneAmerica of asset-based protection. We've got our asset care, which is our life-based chassis, if you will. That's about 70% of our business, maybe a little bit higher, 72% of our business. And then we've also got Annuity Care, which is our annuity-based chassis. So that's a little unique to us here at OneAmerica as well, is that we've got both chassis. And I'm going to explain why we use maybe one over the other as we go through here. But just know that we've got both types here at OneAmerica. So I'm going to start by really covering, probably one of the biggest objections to long-term care or planning to protect themselves from long-term care in and of itself, and that's self-funding. People, whether they mistakenly believe, whether they've been told they could, whatever their logic is, but they just believe, look, I'm going to self-fund this risk. And if you look at this very well-balanced portfolio here, you've got your conservative funds, poised for conservation. You've got your moderate funds, which certainly are poised for growth, but not as much, risk involved. And then you've got your aggressive funds, which are very risky, but poised for significant growth there. So well-balanced portfolio. But let's just say that, let's call it a couple here, and one of those individuals goes on claim in any 1 year. And so that claim ends up costing them, that couple, $125,000. That may be a little rich, maybe here in the Midwest. We get to the coasts. If you're on the coast, that's probably right in line, maybe even a little less than it could cost in a certain year. So I just kind of picked kind of a middle ground there. So let's say that cost $125,000. Now, Is that going to affect their total portfolio that greatly? No, it is not, right? But many times it is more than just a year of care. Maybe now we start to receive 2 years of care, 3 years of care, 4 years of care, or maybe it was one spouse went on care and now the other one starts to need care. So you can start to see where this invades their portfolio and really could change that whole retirement landscape for them. And eventually they could use up their whole portfolio paying for this type of care. So self-funding, is that always the best way to do it? Well, I'm going to give you just another option here, and that's using our life-based solution, Asset Care. So while you see this portfolio here, very simple, straightforward, what I'm going to do is just reposition a portion of this portfolio and create a long-term care plan which has an income stream which could actually provide specific income for a long-term care expense, even up to a lifetime, so that they can never run out of that. So essentially what we're doing here is just peeling away a portion of that portfolio. You'll see we've typically taken it out of those conservative funds, because those conservative funds are really meant for guarantees, and this is a life insurance plan. So it's got the guarantees of guaranteed premiums, guaranteed death benefit, guaranteed cash values. All of that is built in here by using the Asset Care life-based chassis. So we'll peel off a portion of those conservative funds. We create that death benefit by using that. That is where the client would actually draw their LTC benefits from as well, out of that death benefit. So essentially what happens, one goes on claim or both go on claim, they're going to use their life policy first, use the death benefits from the life policy first, which we equate into the LTC benefits, and then that's how the claim process works. Now we have something which we call a continuation of benefits rider, and we can add to this base policy of this life insurance policy, add a continuation of benefits rider, and that's where we can continue. So if they exhaust that death benefit on the policy, we can continue those same LTC benefits for as long as they both would live. And that is very unique to us here at Mutual of Omaha. Excuse me. You could see where I used to work most recently, but here at OneAmerica. So we've got that lifetime structure. And what this really does, especially when we've got a joint situation. Now, I guess it really doesn't matter whether it's a single or a joint, but especially on those joints, if we can put a lifetime specific income for long-term care needs that they could never run out, that no matter how long either spouse needs that gives those clients the ultimate peace of mind when protecting themselves from any long-term care risks. Also protecting that portfolio and their family, all in doing that same sort of situation. So really like this concept around here. And again, unique to OneAmerica, we've got this lifetime benefit structure. All of our competitors in the space maybe stop at 5, 6 years, something along those lines. This lifetime COB option really sets us apart from our competitors. Now we've got a number of ways that we can create this, and if you happen to be in California listening to this, it's a little bit different. I apologize. I'm going to focus on all the other states. Again, utilize your marketer there at IMES. They can kind of tell you if you're in California exactly how this works for California solutions. But we have options for our Asset Care, life-based chassis, either creating, or just doing a single premium, and we can use cash or 1035 exchanges from other life insurance plans. We can create a single premium with a return of premium. So these are lots of ways that we can really fund these types of plans. Annuity funded whole life. I'm going to call this our qualified money option. So did you know that you could use qualified funds to build a long-term care plan? Well, we've got a great solution for that. And again, work with your IMES marketing representative there, and they can let you know more about that. Or even create recurring premiums. And so lots of ways that we can do this, and actually the recurring premium basis. We've got our pay to age 95, which is essentially our annual pay, but we've got a 20 pay, a 10 pay, a 5 pay, plus the single pays as well. So lots of ways that you can create these types of plans. On our Annuity Care side, I'm not there yet, but I'll quickly touch on them. We have 3 options. The one I'm going to really be focusing on today is the one that we're seeing the most of, and that's our indexed Annuity Care. So bear with me. I will get into that here in just a little bit. But we've got a lot of options, a lot of choice points here at OneAmerica. What I do like to do is try and simplify our policy as much as possible, because I've heard when I'm out in the field, there's just so many options and choice points, it's hard for me to wrap my mind around. Well, let me simplify it as much as possible, because if you get this concept, you've got 97% of our policies right here. It's a base policy. So a base policy being the life policy or an annuity. So that's your base policy. Then we've got the option to add that COB rider, continuation of benefits rider, that can either double, triple, or create that lifetime income stream specifically for long-term care needs. So if you can get that concept, you've got our plans down, and then it's just a matter of how you want to fund the plan. So I like to really simplify it as much as possible. Base plus rider. So if I look at asset care here, what I like to point out, I've highlighted a couple things here that just kind of differentiates us from our competitors. First and foremost, 30 to age 85. That's the ages that we can offer, or excuse me, up to age 80, that we can offer our life-based solution here. So you don't see too many long-term care planning options that can go all the way up to age 80. So really wanted to kind of highlight that. Single or joint. And again, one of the differentiators between our clientele, our competitors, excuse me, and us is the fact that we can do either a single plan or a joint plan. So it creates a second to die situation. And a lot of clients love that second to die type of concept. And you as an advisor may like that as well. So just kind of keep that in mind. We're the only ones that do that in this space, that joint second to die type of policy. And that creates this one death benefit that they both now can draw LTC funds from. So really a great way, differentiator here at OneAmerica. I talked about some of these things before: cash, 1035 exchanges from a life or an annuity. We've got all of our payment options, the single premium, 5 pay, 10 pay, 20 pay, pay to age 95. But remember, these are all guaranteed premiums. They all have a guaranteed cash value and death benefit. And those guaranteed premiums will never increase. That was another area that we had to kind of talk around in the traditional marketplace with, over the past probably 10 years. We've seen some rate increases on those traditional type of plans, but again, because this is a life or an annuity chassis, they are all guaranteed premiums, never to change. The other thing that's going to be available here is a guaranteed LTC benefits out of these types of solutions as well. All right, we can add optional inflation protection. So we can do that on both the base policy and the COB rider. However, I will say this, here at OneAmerica, we believe in duration more so than inflation. What do I mean by that? Because we've got that lifetime benefit structure, we believe it's really kind of more important to have a benefit that will never end versus a benefit that will continue to inflate over the years. But remember, we have that as well, so we can get duration and inflation. So if I'm moving over to the rider, you can see everything's pretty much the same there, but that last one that's highlighted is that lifetime unlimited benefit that really I was just talking about. All right, so if we look at the advantages of asset-based versus the traditional space, again, nobody knows what that future holds, so live, quit, or die, your clients will get something for the premium dollars they put into these types of plans. Again, guarantees guaranteed premium, cash value growth, death benefit, cash surrender, and again, guaranteed LTC benefits that they know up front right away what they're going to be getting. That joint coverage, that second to die structure, that really differentiates us from our competition, as well as the lifetime coverage option. So I always like to use this example here because I'm more of a visual learner sometimes. Maybe you are too. And even if you're not, hopefully this still will resonate with you. And I'd just like to kind of illustrate this in a little different way and why that lifetime income stream matters. So what I've got here is a dot plot matrix. I've removed the axis and radius. This is 200 claims on this particular dot plot matrix. So each one of those blue dots is a claim. Now, if we are talking about falling into maybe the average trap, and that can come from the client themselves, that could be a bias maybe that you have, that could be just the only options that you're getting with maybe with other competitors of ours, that you can always solve for the average. Well, what's the average need of care? And if I brought the average line into this illustration, you can see it just splits it right down the middle. And actually 9 dots actually fell right on that average line. Now, any of those below there, planning for the average would have solved that particular situation as well. But look at all of those that are above the line. How many claims now have exhausted their policy, and what happens when they do that? They're right back into that same portfolio that we were trying to protect from the get-go. So here's why I believe lifetime matters. We get rid of the line. It does not matter how long, how short, whatever type of claim period there was, there is going to be a lifetime income stream specifically for those LTC needs, any of those claims that are needed out there. So that's why lifetime matters. It doesn't matter. There's always going to be that lifetime income stream. Now, to illustrate a little bit more around our joint policy second to die structure, why is that important to have that joint policy or second to die structure? Well, basically what it does is it combines the same amount of premium that we're going to use for the female and the male, or whatever the partner makeup happens to be, but we're going to combine the same premiums together. Many times when you combine that same premium together, creating that larger pool, then it can buy you more benefits. Pretty straightforward there. But what I also like to point out here in this particular illustration is the fact that we're going to use with our competitors a $75,000 really premium, if you will, for each of them. And when we combine that together, obviously that's $150,000 for our type of policies. But what I like to point out here, especially if it's a male-female type of couple situation, that long-term care pricing went gender specific about 10 years ago. And so when that gender specific pricing came about, now a husband and wife are paying different, amounts of premium. And I think as an advisor, the last thing that we ever want to do is create another little, side argument or, pillow talk kind of argument between your clients. And so I think this joint structure really helps in that regard too, because not only are they both going to be paying the same premium because we're going to combine both of those, but they're going to get the same amount of benefits. So if you work with our competitors, you're going to see here all the way down that male and female are going to have different benefit amounts. They would, still the same premium amount, $75,000 for each, but they're going to have different benefits amounts. And that's where kind of that grumbling can come in. But when we pool that, it's all one premium amount, and then we split that same amount between both the male and the female. And oh yeah, these policies from our competitors here, you can see that they're all less benefits because they had to split them out singly, their individual policies. But look at how long they cover them for. They're going their max plans, 6 years. So not only do we give more benefits, but we give it for the lifetime of either insured as well. So again, asset care really outshines the competition, especially in those joint situations. Now, I told you I wanted to talk about Annuity Care as well. So Annuity Care is our annuity chassis, and really wanted to cover three main reasons why we look to Annuity Care. So those clients that you're working with that maybe failed to plan or whatever the case may be, any of those that are 70 plus, even up to age 85, we can work with them on our Annuity Care solutions. So that's really unheard of in this space. But any of your clients that are 70 and above, we're typically going to start looking at our Annuity Care solutions, largely because the leverage there created in Annuity Care will be better for the client in the Annuity Care illustration. So that's why. So again, advanced age, 70 plus, we're going to look to that. Those that have, health concerns, that's another big reason. So an underwriting option is a big reason that we move to Annuity Care as well. As a matter of fact, if your clients start on Asset Care, our life-based chassis, come in that way, and we're not able to offer them an Asset Care plan, our underwriters automatically look to our Annuity Care suite and see if there's something that we can offer them there. So we're always looking for ways to offer your clients something. So that, when it comes to underwriting, just know that we're always looking for something. We've got kind of that fallback position to the Annuity Care suite as well. And then probably the biggest reason we use Annuity Care is that there's a lot of non-qualified annuities that are out there kind of just sitting on the sideline. And many of them have significant gains. And we've got a solution here with our Annuity Care suite that I'm going to talk about here in just a minute. But that's a big reason that we use the Annuity Care suite. So moving forward, I'll hang tight with me on that thought. I will get back to that in just a moment. Concept of annuity-based, again, essentially the same as Asset Care, just peeling away a portion of their portfolio, creating that cash value that they can pull those LTC benefits from, and then we can add that COB rider again to create that lifetime or unlimited income stream specifically for long-term care. Now, if you've worked in the annuity marketplace before, you know that there's really four main reasons that people buy annuities: tax deferral, cash value growth, those death benefits, and hey, the option to annuitize. But I always say, I like to offer this one as well. Is your client's non-qualified annuity in the right space? Is it where it needs to be? And why do I ask that question? Well, our Annuity Care suite is all Pension Protection Act qualified. And what does that mean? So it says if we 1035 exchange that non-qualified annuity that's sitting out there, maybe has a large gain that's in those contracts, if they would just leave it where they were sitting, when they start to take that money out, they will be taxed on any of that gain portion. When we talk to many Annuity Care owners, as a matter of fact, we did a Gallup poll, and I think I took that slide out of this presentation, but we did a Gallup poll and asked non-qualified annuities what they were going to use their annuity for. Most of them said, 83% said they didn't want to be a financial burden to their families, and they were going to use it in case they had any kind of long-term care situation or care need in retirement. So if they left it there and they're going to use it for that care need, again, they'll be taxed on every distribution for the gain portion. However, if we just 1035 exchange that over to any one of our Annuity Care contracts, that is now becomes a PPA eligible annuity. And essentially what happens here is that we get rid of all of that gain. So from tax deferred to tax free for LTC. Now, as long as they use those for long-term care expenses only, even the gain portion becomes income tax free. So we really like our Annuity Care suite for this type of example. And again, many times that's just a dead asset sitting on the sideline waiting to be used, or again, just kind of sitting out there as their safe money. And why not put that into a vessel that can be income tax free if that's really what they're going to be using it for? And then we've also got the option to add our continuation of benefits rider. So again, to simplify it, base policy and COB rider, just like our asset care, it's now an annuity based policy. So the one I'm going to focus on here today is the first and only fixed indexed annuity with PPA LTC benefits, and that is our indexed Annuity Care option. So we've got three: Annuity Care, Annuity Care 2, and then our indexed option. We're seeing much of our business here in this space, so I figured I would really just focus on this one today. You can see here, it's a base policy on the annuity side, and it depends if it's a single or a joint basis on how long it takes to pay out. If it's a single, it's a 24-month basis. If it's a joint plan, it's a 30-month payout, if you will. You can see the ages there, 40 to age 85. Again, we can do single or joint, but it is a fixed indexed annuity, and the potential is linked to the S&P 500. So we've got 5 different crediting strategies that they could choose from. So it works very well. Many people want to take advantage of some of that upside potential from the S&P 500 with protection from that downside risk. It's tax-free for LTC. Now, you'll see a little asterisk there. If they use qualified money into this solution, there could be some taxation that is attributable. Most of the time, we are using non-qualified funds for this, and that's why that slight access or asterisk is there. One thing that I love the underwriting on these types of plans as well. It's a 5-question knockout app, so very straightforward, simple. And if they're doing a base-only policy, not adding the COB, all we have is that 5 knockout question app. Then we do a script check and an MIB check, and then it's accept or reject. So really straightforward, easy underwriting there. However, if we do use the continuation of benefits rider, there will be a telephone interview required as well. So I like to point that out also. Now, the COB options, we can double the original amount, triple the original amount, or again, my strong recommendation is always to have that lifetime benefit structure. So where does this fit, or who to look for in your potential book of business? Again, asset care, those needing LTC protection or doing that retirement planning that you're doing with them. Joint cases, prior experience. That's many times what drums up the first conversation around this, is that they're having some sort of prior experience or current experience with their family. Those that just want to self-fund, why not do it a better way? And then I didn't go into this today, but there's taxation benefits in here, especially in the business scenario. This is a 7702B product by the IRS code standard. So there is ways that businesses can take advantage of a tax deduction. And again, I don't have time to get into that today, but we can certainly focus on that maybe in future presentations. Annuity care, those that failed to plan or forgot to plan, advanced in age, 75 to age 85, 70 to age 85. Those with health concerns, and then again, that taxation play utilizing the Pension Protection Act is a huge option and what to look for. All right, so now what? We know all that information. I always say it starts the conversation. And really, I can give you 2 quick questions that if you just ask your clients these questions and wait for their answers, you're going to hear exactly what their buying signals are and why they would want to put these types of plans in place. So first and foremost, question number 1, you may never need care, but if you did, how would that affect your family? And so there's really 4 important factors. I'm going to fly through these because we just don't have a ton of time today, but spouses, if you're going to rely, if the decision is to rely on that spouse, the stress of caregiving for somebody who is ill can really wear on that other spouse. You know, if they're saying that they want to rely on their children, gosh, you know, my daughter, I cared for them all the time. She's a nurse, she can care for me. Well, the problem with that is many times what we're doing is then asking her to put her life on hold to care for you. And is that really what your client wants? No, that they raised them to have a better life than they did. And they're trying to give them every opportunity to do so. Now, when they're saying, well, hey, you've got to take care of me, they're certainly taking away from just that. You know, they may have their own family, their own children, all of these obligations that they're doing. And if they have to put that on hold or set it aside, that can really affect their adult children in and of itself. Family dynamics, this is a big one too. So what's interesting, as the nuclear family has certainly spread out over the years across this great nation of ours, you know, the whole family isn't in that one tight little community as much as it used to be in years past. You know, many children, adult children, may be in various states across this great nation of ours. What's interesting is when that claim situation arises, typically it's the one that's closest to mom or dad or whoever is needing that care. The person that is closest is the one that bears the bulk of the caregiving duties or expense thereof. They certain bear the heaviest burden, and that can really put the strain on that family that maybe was very once close knit. And another interesting phenomenon that's come out of this in my 20 years in this industry is that almost always the one who is furthest away from the situation, furthest geographically, has the most to say or speaks the loudest. Just you know, trust me on that one. So family dynamics can really be impacted. Then unnecessary losses are something that you can avoid here as well. Question number 2, very quickly here. And if you did need care, how would you pay for it? So again, if we just wait and listen for their answers, that's exactly what we're looking for in these types of plans here. All right. So with that, I know we're kind of up against time, so I'm going to stop there, Justin, and just say, do we want to just wrap this up here?
Yeah, absolutely. Thank you very much. And in addition to that, these questions and some other details further, and Brent, anything else, I'll talk to you offline that we need to get out to those folks. We'll be coming out to them today for registering, and then part of the guide, one of the long-term care consumer guides that I've personally used with my family recently to help foster these questions, we'll be getting over to you too for those that license with OneAmerica. Thank you again for your time today, Brent. I'm going to go ahead and ask a couple questions to the audience. These are polling questions so we can best sort our attention to get those that have an immediate need. So the first question I'm going to go ahead and run here is, would you like more information about the specific topic that we discussed today? So I'll give you a little bit here to respond. Essentially, is there any additional information you would like to discuss on the topic we discussed today? So we're going to be getting over to you the product brochures, etc., and that is what we're going to do. So I'm going to go ahead and we're collecting responses, collect a few here, and then we'll close it out and go on to the other one. Thank you. And on the next question, would you like to get contracted with OneAmerica? So if you're with us, or if you're not and you want to be licensed with OneAmerica, let us know. We'll get that licensing sent over to you here. So as we reach out to you, you don't have to wait on it as we go forward. And if you're already with us, or you believe you are, or if you're somewhere else and you haven't written business, you'd like us to know, we can find out all that on our back end program here. So just let us know. But we'll get you the link to Surance Bay. We also do online digital licensing, which I didn't mention earlier, is available on our website as well. But feel free to email your primary contact at IAMS or go ahead and give us a call. at 800-255-5055 and ask for licensing or life insurance, etc. So I'm going to go ahead and close that one as everybody's wrapping up here, and we'll go on to our final polling question of the day. Do you have, or do you need an illustration or want to discuss a design on a client that you're currently working with? So many of you are saying, why did you put the order this way? That's why I licensed. Now's your time. So next time I'll switch the order up. But if you have a illustration you'd like run, or if you have a client that may be a consideration, but you want to hear more about something Brent mentioned, maybe they have qualified money, you want to know if this type of plan works, what have you, give us a call, but indicate here and we will reach out to you and put you in priority here for attending the webinar and having a question. So in either case, we want to be able to help you with those designs as well. So if you do have any further questions, and as Brent had mentioned, we'll be getting this information out to you. As always, appreciate your attendance and patronage with IAMS. And those of you coming on board new, if you have not discussed life insurance or long-term care insurance or anything with risk management, please reach out. I'd be happy to speak with you and share with you, introduce you to your teammate here at IAMS, your support person, etc. And have a great new year. If those of you, one other thing, if you have not registered for Ascend, this is important, our virtual sales conference coming up here on the 19th and 20th of January. You're going to be able to, when you register, that gives you access to being able to go back in and download or re-watch these sessions that you weren't able to attend. So it literally is a conference room without craft services. The way I look at it here, they're not going to be serving tea. That'll be on your own, on your side, but there will be different events, some of which may have conflicting times, but it's pre-recorded material. So you choose the times if you register. So it's very important that you register, ask your contact today, 19th and 20th, top producers sharing with what they believe got them to where they're at. And then we've also done polling within our group to many of you. Thank you for your input as to what you may want to know from someone who's leading in a particular industry, say like long-term care, asset-based care. You're going to hear it from the producer, from the horse's mouth, if you will, as well as Robert Schiller. We're also going to be going through annuities, life, and long-term care with the team here. Thanks for attending and have a great day. Thank you, Brent.
Thank you. Appreciate the time.
Welcome. Have a great day. Thanks.